So, hello everybody, here we go for another one of these short Substack videos. Again, sorry for the absence, but I've been struggling with my voice, so hopefully this sound doesn't sound too terrible. So, something I wanted to look at, and this is not something I've seen a lot of people talk about, so maybe it's just a different chart, an interesting perspective. So this is AIQ, so the Global X Artificial Intelligence and Technology ETF. And some of you have probably heard me talk about the fact, what if tech, what if mag 7 Fangman, broader Fangman has essentially started topping back in September, October, right? And here this offers another interesting look at that concept. Now, why do I like looking at this? Because as opposed to some of the indices or some things where you've got, very crazy weights, right? Here, this is a far more balanced view. So these are the top 10 holdings. And you could see whether you're looking at, Google, Broadcom, AMD, Samsung, Apple, Tesla, Baba, TSM, Cisco, the weights are fairly normal, right? You don't have the crazy NVIDIA weighting you have in other places. So I think it's just a more balanced approach, a more balanced look, right? And here, what is interesting is that if you go back and you look at the monthly, what we've seen is we got very, very bearish reversal candles in November, right? And usually it's fairly rare to see this kind of action without some kind of follow through, especially when it's at all-time highs, and especially after it comes at a very parabolic move. So this is something that, first of all, should tell you, it would not be surprising to see this come back and test all the way into the 10-month moving average, right? So from that high, that's looking at about a 15%, 16% correction. It's not a crazy move. It's not the end of the world. And, this could come back even into the 2025 open and still hold an uptrend, but it's just something to keep in mind. If you look at the weekly, this week we're struggling to hold the 10-day moving average. Interestingly enough, if you go back on the daily, you can see what looks like some kind of a topping process. Some people will be calling it a head and shoulders pattern, right? Basically, you put a shoulder, head, and another shoulder topping pattern. Now, what I would be looking at here is, to me, there's a couple of interesting things, right? So first of all, we had this first top followed by a very, very aggressive sell marked out by this candle, right? You had a very, very big range. And I think this is absolutely key to have these two reference points on your chart. And the other thing is, once we broke out of this candle range, right, you saw we did so with a very explosive move, gap up, right? Now, what happened then? We got what you would call, I think, technically speaking, I'm not a CMT, you'd call this kind of like a island reversal. I like to call it archipelago because it's a bunch of islands. But basically, you've got this explosive move, right? We double gap up, we hold here, and you're seeing gap ups, gaps down in all directions, but very, very ugly bearish pattern. And then another gap down, actually all the way below this gap, this candle open. So this is a very, very ugly pattern. Usually when you see this kind of pattern, you tend to see all the near-term reference points flushed fairly quickly. And we did with a lower low set. Now what's happened, we've popped all the way back up, but you could see how the market is still struggling to get traction around this reference point. Now clearly you can have this reference point too, but I would stick with that one. So here, going forward, what's going to be interesting, especially if we go into the last weeks of the year, I think we got about 10 full trading sessions left, 2 half days. But basically is how we trade around this level and how we trade around this range. And this could be a story for next year, but bottom line is, as long as we're stuck inside this area, I would say much to do about nothing. If you start to see weekly closes above this zone, then chances are that YOLOs are back and we're going to try and gun back from these highs from a bunch of stops, probably holding up here. But if we close below this area, then I think there's a lot of poor structure to fill to the downside. You have the confluence of this previous all-time high coming in with a 200 moving average. And as you've seen on a lot of charts we've been discussing, and whether that's Netflix, it's been Meta, etc., a lot of these charts point to distribution at highs breakdowns that target and unwind back into the 2025 open, back into the 200 DMA. So I think this is a particularly interesting chart to look at, and especially for somebody who wants to have a little bit more of a balanced view, a equally weighted view of, you know, the whole an AI basket. I think this is an interesting one to look at. Okay, hope that was useful, guys. Have an awesome one. Talk to you guys soon. Take care. Bye bye.